we're looking at the economy for 2025. We're hoping it's going to be good coming off a negative quarter. We had Hurricane Beryl last year, which kind of threw a monkey wrench in things. What are the economic projections looking like for 2025?
Yeah, sure. So, I mean, you're right. You actually mentioned a couple of the key factors. Beryl certainly was a headwind for the economy in the latter half of 2024. And the expectation is that the overhang will continue into the first half of 2025. However, absent any unforeseen circumstances, we do anticipate that growth will pick up in the later quarters of the year. And in particular in areas such as agriculture, right, that will certainly show an intermittent spike given the significant decline on the back of the hurricane. Tourism is also a very interesting area of the economy. There is programmed an addition of, I think, about 20,000 rooms over the course of the next several years. And Jamaica's tourism product is actually experiencing, I think, an unprecedented level of diversification. We're seeing a different kind of product emerging out of Jamaica, and therefore we're attracting a different kind of visitor. So that area of the economy is also quite interesting. Finally, we are seeing real estate continue to be a key contributor to overall economic activity. And it's our expectation that as interest rates decline, there may be some correlation with an uptick in real estate as well during this year. So looking and seeing.
What are the global and local trends and economic conditions that are likely to affect the markets this year?
So globally, I think you can't ignore geopolitics, right? There is a significant exactly. There's a significant leadership change that's happening in the United States, and significant leadership changes that are happening in other areas of the world as well. Right? We saw recently the resignation of the Canadian Prime Minister as well. So geopolitics is certainly one theme. On the back of what is anticipated with respect to policy, at least in the United States, there are no questions about a potential return in inflation. There has been adjustments down in interest rates across global economies. There's a question as to whether that will continue or whether central banks around the world will hit pause to kind of take a wait and see approach. So I'd say those are some key factors for sure that we need to look out for at least early in 2025.
So let's bring Clive in. I think this is a good time to bring you in, Clive. What industries are you eyeing for 2025? Like, what do you expect to do well this year?
Well, interest rate impacts the broader economy. And raising capital will be a little bit cheaper for many companies. And I think many companies are looking in that direction. I think there's a level of optimism in the longer term. We know that there are some headwinds that were faced since the Hurricane Beryl and the consistent rain since about mid last year. But I think that there is significant and good I think there's a broader general level of optimism among principals of many of the listed companies, and many of them are expanding. So as interest rate goes down, capital should be cheaper, and we can see some growth in these companies. Looking at the results over the last several years, we have seen significant improvement in many of the companies' performance. And albeit, coming out of COVID and the high interest rate environment, we see some recovery in prices. So I expect nearly every industry, the financial, the real productive, the retail and distributive sector, we see the energy companies doing well. We see transportation sector, logistics and transportation, for example, Trans-Jamaica. We expect those. There are impending listings on the market also that should help to drive some value in the respective sectors. So broadly speaking, I expect the broader economy to do fairly well, at least to improve this year, in the latter part of this year. Yeah.
So Ramon, we saw financial sector lagging last year, bringing down the average for the entire industry. And it's been that way, I think, since COVID. Financial sector has been one of the hardest hit in terms of stock prices and so on. However, Barita was the exception to that. Last year, we saw Barita actually come in with record-breaking profits in last financial year. How do you envision the company navigating the current economic climate?
Yeah, so you're right. I mean, the financial services sector has struggled in the face of the major drivers of the economy. I mean, the fact is that with the tightness of monetary policy that we would have experienced for the better part of the last 2.5 years, with interest rates going up as much and as quickly as they did, traditional revenues from financial services companies were hit hard, right? Net interest income, potential trading profits, the capital market slowed down, right? We spoke about the fact that there were very little IPOs over the course of the last 2 years or so. From our perspective, the reason we displayed some resilience, particularly in the last 2 financial years, was that we set out post the acquisition of the business to really diversify our exposures. And as such, during the last 2 years, we would have seen the benefit of that diversification, where we saw declines in certain areas of our revenue stack. We saw increases in other areas. Now that there is a little bit more certainty with respect to the outlook for monetary policy, or at least we've actually started to see interest rates abate a bit, we have seen a return of some segments of the traditional revenue landscape. So our outlook is really for more of that, more of a return in traditional revenue. So interest income, we're anticipating an uptick in the number of deals and the size of deals that are going to be featured in the capital markets. We're also expecting, generally speaking, for the performance of investment assets across both the equity and fixed income space to improve. And we're hoping that that will translate positively to our own revenue as a company.
Which ones you said? Fixed income and
equities.
So what were the areas that you diversified to that helped you to see record gains last year? Like, give us the playbook. We all want to know.
So our business, I'd say, Khalila, is kind of spread across 4 main areas. Right? We have our treasury trading and brokerage business line that tends to cover the traditional areas of revenue. So net interest income, foreign exchange trading, fixed income trading, equity trading, etc. And last year, we saw a material uplift in revenues from that area. Right? As I mentioned, traditional revenues returned. So we saw a significant increase in revenues from our fixed income trading. We saw a significant increase in revenues from our equity exposures as well last year. Complementing that, we saw a surge in revenues from our investment banking business. Revenues from that line were up to over $1 billion in last financial year, relative to just north of 600 plus million in the previous financial year. Right? We also saw some resilience in our alternative investment exposures. Revenues there were kind of flat year over year, but notwithstanding contributed materially to our overall revenue stack. So it was a very good blend from all the different business lines. The 4th business line is the asset management business, and that was up year over year in the high teens in terms of revenue growth. So it was really a team effort across the board in terms of the different contributors from the different revenue areas.
Clive, do you see financial sector finally rebounding this year?
Yes, we could. I mean, there will be improvement in the balance sheet of many of these companies, which is significant in determining valuation. So I expect that. We have seen some slight recovery of a few stock prices in the particular financial sector, and I expect that to continue. What is interesting also, I mean, finding capital and cheap capital is important. But as interest rate decline, then we should see that, a little bit easier on many companies. But the revaluation of balance sheet is where I think many investors will be looking to see how strong these companies are. and we'll perhaps use that as a basis of moving prices.
Ramon, you guys have a big meeting coming up. I think it's next week on the 20th for Barita shareholders to vote on a scheme of arrangement. So what key details can you share ahead of that meeting on the 20th?
Sure. So I can tell you what the purpose of the meeting is. A scheme of arrangement sounds pretty fancy, right? But what it really is a chance for Barita shareholders to vote in relation to a reorganization of the Cornerstone Group, right? Or what will ultimately be the Barita Financial Group, right? So Barita is owned by Cornerstone Financial Holdings Limited, and the shareholders of Cornerstone Financial Holdings Limited also own a bank, Cornerstone Trust and Merchant Bank. Because of that common ownership of both a bank and a securities dealer, we need to reorganize into a financial holding company structure. And this isn't novel, right? There are several other groups that have done this before us. The GMMB Group, for example, has done it. The NCB Financial Group has done it as well. The VM Group, and so on and so forth. So essentially, the vote is for Barita shareholders to decide whether they will consent to Barita moving from being majority owned, or 76% or so owned by Cornerstone Financial Holdings Limited, to being owned in that same portion or proportion by the Barita Financial Group, which is intended to be a financial holding company, right, licensed by the Bank of Jamaica. With respect to other shareholders outside of Cornerstone, to the extent that the scheme is effected, nothing will change. They'll still own the same amount of shares of Barita, and it will represent the same proportion of shareholding in Barita. Simply post the scheme to the extent that it is passed, Barita will be majority owned by an entity that is expected to become a financial holding company, being the Barita Financial Group. And that entity will still be owned by the same shareholders at Cornerstone. That's in essence the purpose of the meeting.
Is there anything that shareholders can do to prepare for this meeting?
Good question. So we would have published on the Jamaica Stock Exchange a good bit of information describing not only the purpose of the scheme, but everything to do with the meeting. There's a scheme booklet which gets into a lot of details about the group. So shareholders could actually log on to the JSC, download that scheme booklet, read it through, and put themselves in a very good position to decide on the 20th or before via proxy what direction they want to vote in.
All right. Well, thank you so much. Clive, anything else that you want to share before we leave for this evening?
Well, yes, what I can say is that globally, particularly with our larger trading partners, and the major currencies we're trading, we see interest rate trending downward. So that augurs well for our domestic economy. Our biggest concern is, of course, inflation, as it is in many of these larger economies, but also because capital is so easily transferable. We want to ensure that our interest rate move in line with our major trading partner, the US. So far, that is happening. A little hitch is, of course, the threats emanating from the newly elected president-elect as to the extent to which he'll be able to implement some of his prospective policies is still determined. Is it still in the air, right? There's going to be resistance from business people who will see their cost jump up significantly. There may be some significant short-term hit in the U.S. economy. How quickly will they recover, right? As well as there are institutions, state institutions, government institutions that is the protector and guarantor of a stable economy. So there will be resistance somewhat. But maybe it's just a lot of hot air. The point is, though, is that I think there's a general level of stability, at least in our domestic economy. Yes, we have gone through a little hiccup. The GDP measurement so far indicated probably up to about a 3.5, 3.9% decline. But I expect some recovery because other factors are weighing in. We have a good fiscal going into this year. We have good, fairly stable monetary policies. We still have consistently declining interest rate. So I expect those to play a big role in kind of giving some level of stability to our domestic economy. On the micro side, companies are doing fairly well. Companies I think, are optimistic in the much longer term projections, and therefore they're investing, seeking capital still, whether debt or equity capital. We see mergers and acquisitions occurring, right? And we see, for example, an exchange of shares between AS Bryden and CPJ. The offer circular indicates that they wish to leave CPJ as a listed entity. So we now have more opportunity for persons to realize value in this exchange between these two entities. So speak to your advisor, get your research, your valuation done, and look as to whether, I think it's 35.23 CPJ shares for every 10 ASBH. That is happening up to the 14th of February. So you have a good time within which to sit with the advisor and decide how. But that again presents some value outside of just buying stocks and hoping for capital appreciation and some dividend cash payout. So look at those opportunities like that.
Is it a good offer? That offer being made to CPJ shareholders now, is it something that shareholders should take up?
Okay, well, here's what I can say. Based on the prices, look at the prices of when the offer opened. It was the 10th, which is Thursday. You can use the closing prices of the market times 35.23 CPJ and times price of ASBH, AS Bryden, times 10. And so what the exchange value is. But the real research, the real value is in the prospective growth of these entities. ASBH and the value it presents going into the future and the medium to long term versus CPJ. And is it an attractive exchange in the longer term rather than simply the very immediate and short term?
What do you think? What's your opinion? Bearing in mind, guys, this is not intended as investment advice, but what's your opinion?
What would I do? What would I do with I would exchange. I personally would, do an exchange. And again, they wish to acquire up to 79.99% of the company. So CPJ will still be a listed entity. So you should still consider the future value of CPJ within the wider group, and if you think it provides some value to your portfolio. I remember we're thinking on a portfolio basis. So it's not a strict exchange one for one, but how do you balance both in your portfolio in a basket?
Okay, Ramon, final question goes to you. It comes from Sherwin, who just wants a little clarity on what's coming up on the 20th. So is it me or is the CEO saying that it might be fully owned by Cornerstone, like what happened to T-Tech? I don't know.
So thanks for that question. Actually, no, I'm not saying that. As I said before, the non-Cornerstone shareholders of Barita will experience no change whatsoever in their circumstances should the scheme go through. What will happen is that the shares currently owned by Cornerstone Financial Holdings Limited will move to the Barita Financial Group, which is intended to be the financial holding company. So the other 24% or so shareholding in the company will remain in the hands of those who own it now, and they'll own the same exact entity, right? So nothing will change to the extent that the scheme goes through.
All right. Thank you. Thank you very much, Ramon. Thanks again, Clive, as well. All the best for 2025.